And looking at those acronyms, what were our acronyms? Ayulich and Edgladu. Right. Okay, now let's take a few examples, okay? So that it's something that we can identify. And if we see something like this, let's look at the example. If you look at your inventories, now, you see an arrow here. Aha, you've heard me before, haven't you? The love arrow.
Okay.
What happens if a love arrow is misdirected in your life? It creates havoc.
Yes, stuff goes wrong.
Absolutely. So the same thing would apply in accounting. Watch the love arrow. It starts at 2009, it ends at 2010. So 2009 is the beginning of the year, and my 2010 is my end of the year. Got it? So don't take for granted that it's going to appear this way, because it could appear with 2010 being here and 2009 being on the right-hand side. So be careful in the exams. The first thing that you do is, when you are working with two columns, draw your love arrow from the beginning of the year to the end of the year. So you know exactly what's my amount at the beginning of the year and what's my amount at the end of the year.
Okay.
Got it? Okay, let's take the example. Let's look at inventories. My inventories at the beginning of the year was standing at 10,000. Got it? But my inventories at the end of the year, the amount appears as 15,000. What's the question? What happened to my inventory? Remember, inventory is an asset. What's happening to the asset? It's increasing. And when you increase an asset, you are utilizing. Got it? And therefore, look at this, the important part. Look at the formation of a U. I'm going to show you the formation of a U. Can you see? It tells you there must be a bracket around the figure.
Okay.
To indicate to you that the money has left. There's been an outflow of funds from the business. So every time you are utilizing, your cash is getting less. Remember, at all times, you are asking yourself, what is the impact of this particular one on your bank account? So if your inventory is increased,
it means you bought something.
Absolutely.
You spent money.
That's right. The stock didn't fall from the skies. You had to use some moolah to buy the stock, isn't it?
Yes.
And therefore, you have that figure appearing in brackets to indicate a utilization of funds.
Okay.
Right. Let's take another example. Trade and other receivables. It was 30,000, it is now 10,000. Once again, you ask yourself, what is trade and other receivables? It's an asset. What's happening to the asset? It's decreasing in value. Correct? You see it? And when an asset decreases, we are generating funds, which is a positive.
And
20,000.
again, we don't have a use, so we're not going to have our bracket.
Absolutely. Absolutely. Spot on, my dear. Right. Then we look at trade and other payables. It was 50,000, is now 40,000. Going back to my acronym, what happened to my liability? My liability decreased, is that correct?
Yes.
Because it was 50, is now 40. Therefore, it has been reduced, and the amount is 10,000 rand. Can you see the difference between the 50 and the 40? It reduced by 10,000 rand. In other words, what happened? You paid your liability. And therefore, what we had was the amount in brackets. Are we taking a caller?
Okay.
Okay, we waiting?
Yes, we've got a caller right there. Hello, Andy.
Hello.
Hi, Andy. Can you give us your question?
Okay, I've got a question. You know, in your cash flow statement, right, you've got your dividends paid, but I always seem to get them wrong. So I don't know what I'm doing wrong while I'm calculating them. You know what I'm saying?
What's a specific question, please?
Like, you know, on your cash flow statement,
Yes.
you know, you've got profits before tax.
Yes.
Then you've got interest paid. Then you've got tax paid. And then you have dividends paid, right?
Right.
So what I don't understand is how I get my dividends wrong, because I always seem to get them wrong, because you have to calculate like different thingies before you actually get your dividends paid.
Absolutely. Andy, if you stay with us for a while, the next segment we're going to explain to you how to calculate your dividends paid and how to calculate your taxation paid. That's following up in this segment. So we do have something like that ready for you. Should be up in a while.
Okay.
Thanks, Andy.
Okay, thank you very much.
Only a
All
pleasure,
right,
my
then.
dear.
Keep watching.
Okay?
Okay, should we continue with
Right.
that one?
So we'll carry on with this here. So this is now the completion of note number 1. Okay, now what happens? Watch this here. And this is now to calculate what Andy referred to. Why is she getting those figures wrong? Because obviously you have to first draw up a note for those figures. And the first note that we're going to be drawing up, we've done the first note, the cash generated from operations. We're now looking at our taxation paid. Okay, and how do we calculate our taxation paid? You may use any method in the exams. It's totally a matter of choice. I'm going to show you one method which I find to be the easiest to comprehend and to remember. Watch this here. You start off with the account which is your SARS income tax account. Okay? So remember, it's your balance sheet account. Which one? SARS income tax. And you look for your opening balance. Now, this could appear in one of two places. Either as a debit balance under trade and other receivables, or as a credit balance under trade and other payables. It just depends what the balance was last year. Now, in this case here, you can see that your balance is a credit balance at the beginning of the year, meaning indicating to you that at the beginning of the year, you were owing SARS an amount of 60,000 from last year.
Okay.
Got it? So step number one, get your opening balance. Finalize your opening balance. And as I said, it could either be a debit balance or a credit balance. In our example, it is a credit balance. Got it? Okay. Step number two, follow the procedure. Watch the modus operandi. Watch how I go about doing certain things. Step number two, slot in your closing balance. Where are you going to look for it? Same place, guys. Either under trade and other receivables or trade and other payables. So if it has a debit balance, it's going to appear under receivables because it's a debtor account. And if it has a credit balance, it's going to appear under my creditors, which is a liability.
All right, we've got another caller.
Okay, let's take the caller.
All right. Hi, Henny.
Hello.
Hello, can you give us your question?
Okay, yeah, I want to know how to come up with the accumulated depreciation under the account of asset disposal.
Okay, Annie, yes, an important question, but once again, remember, please stay focused, stay with us, because that comes in a later section where we do the asset disposal. So we will be addressing that part for you, right? Right now, we're busy with note number 2, and as we progress, we should cover your question on the accumulated depreciation.
All right,
All right,
Henny.
Annie?
Okay.
Or do you want me to take that question? I can go to the accumulated depreciation if you want me to.
Okay.
Yeah.
I think it's all right. I think we will look at it a little bit later. Soon, let's move in order, ne, Henny?
Exactly. I just don't want to confuse you because I want you to see the progress through our notes as we work. Right, Annie?
Yeah, sure.
Okay.
All right.
Thank you. Okay. Coming back to my SARS income tax account. We said opening balance. We said closing balance. Remember, the closing balance was a credit balance as well, and therefore a credit balance as well. So you've slotted in the opening balance, you've slotted in your closing balance. Step number 3, look for your expense. What was your income tax for the year? Now, double entry, debit income tax, credit SARS income tax. There goes. So now you've got opening balance, you've got closing balance, and now you've brought in your income tax. And voila. What are we looking for? We're looking for the missing figure. Watch this. 160,000, right? 160,000. There's my 20,000 as my balance, and this is the missing figure that I require. Okay, so therefore, you can clearly see that the amount of taxation that has been paid is 140,000.
Okay.
Okay, so this account is so important for you to understand, and therefore you will notice that your taxation paid as it appears on the face of your cash flow statement will say taxation paid 140,000. Okay, now calculating the dividend paid. Once again, what am I going to do? Open up my ordinary share dividends account. And in this account here, remember that this bank figure here represents my interim dividend. Okay? When we pay an interim dividend, what do? We debit ordinary share dividends and we credit bank. So immediately I've got my one bank figure, 36,000. Right. Then, If you look at this account here, your shareholders for dividend, it had a balance at the beginning of the year, a credit balance of 40,000. Now, in this year, you're going to pay last year's figure. And what was last year's figure? This 40,000, which we're going to be paying. Therefore, you are left with two bank figures. One coming from where? From your shareholders for dividends. You're paying last year's amount. And the other one, just to refresh the memory, we are paying the interim dividend of this financial year. There's your second bank figure. Therefore, your total dividends paid will be made up of the 36,000, remember, last year's figure, 40,000, your interim dividend for this year. The total dividend that has been paid is 76,000 Rand. So in other words, grade 12s, what are we saying? Please make sure that you are au fait with your shareholders for dividends and your ordinary share dividends. Stay with us. We'll be back in a jiffy.
All right, thanks again for that one. It's time for us to go for another